Hey, fellow investors, how do you lose $1.5 billion dollars in market capitalization in just 1.5 months? Well, this company has just done it. STATS, standing for SATS, which stands for Singapore Airport Terminal. On the 20th of September, they announced the acquisition of WFS for $1.8 billion. Dollars. The share price, based on the number of shares stand at 1.12 billion was 3.87. Right now, the share price as of yesterday, Thursday, it's down to 2.55. Yes, 1.5 billion has been lost in just the last 1.5 months. Wait a minute, I thought you did say that this is actually a Temasek Link company. So what? Stay on for this video and more of this in-depth analysis. Like and subscribe our channel as we delve into this issue in this week's video. But hang on, Gabriel. I thought the acquisition of worldwide flight services would propel STATS to become the number one air cargo handler, right? Because WFS is the number one player. So everything is number one, you know? So why is the market taking it so badly? Is it a situation where the management should have done better in positioning the deal? Now, this acquisition smacks of many, many warning signals that we disliked pertaining to acquisitions by companies, not just this particular stats, as well as for real estate investment trusts, which we have been teaching in the last 33 years. Let's look at this slide that's actually given, to justify the acquisition. What did that says? It will accelerate transform. Now, this, ladies and gentlemen, if you look through all the REITs acquisition in the last 20 years, the word accelerating, transform, and market leader, as actually highlighted in these red boxes here, will continue to repeat themselves over and over again. But as investors, ladies and gentlemen, know what are you looking for? You're not looking for the REIT or the company to become number one. It is only by actually being profitable. Whether you are number one, number two, it really doesn't matter unless you're talking about a monopolistic kind of situation. Now, in this case, stats management could have done better if they have actually assuaged investors, of the project funding plan. And supposedly, their funding plan is supposed to be very acceptable. What is it? What did they say? They say that they have committed funding in place. Okay, and that committed funding is only through an acquisition bridge facility. All right, and it entails 1.7 billion of fundraising. But hang on, did they not have to reiterate, that their rights issue was going to be less than the supposedly mentioned amount? That's $1 billion a few days after the 28th September announcement. And then in the recent set of results, they have mentioned again that the rights will not be more than 800 million. So you can see, ladies and gentlemen, if they have guided nice and well, you can see there wouldn't be any confusion pertaining to this. And ladies and gentlemen, it is very important when you do an acquisition because the share price will react and depending on market conditions. And as you can see, ladies and gentlemen, in my book, Making a Millions in REITs, there is really no reason why management should be forgiven if they actually read the market wrongly because they are advised by armies of bankers, armies of stockbrokers for which they pay millions. So, take for example, if you're a stat shareholder, you should be asking the management how much are they paying for this advice pertaining to this acquisition, whether it's going to come through or not. Okay. Now, the other thing that is actually stated in the slide is that stats will achieve an unmatched and unparalleled position in the footprint in other parts of the world. Big deal. Ladies and gentlemen, investors are looking for profitability, not footprint, not unmatched, not accelerating, and depending on basically how you transform yourself. Okay, bro. So, why is it? What else is actually amiss in this basically acquisition? I think this must be one of the worst corporate, you know, capital destroying uh, situation that we have seen, right? Losing 1.5 billion in just 1.5 months in Singapore corporate history. You know, what else are actually trigger points that actually suggest that even if you look today where everything is in rebound, the Friday coming on after the Dow has actually accelerated 1,200 points, not something we've seen for the last 2 years. Why is it that stats is still sitting or sitting, and the past tense for sitting is sad, and in a very sad state, SAD from SATS, it became SAT, and it's a very now in a very sad state as SAD, still doing at 2.55. This particular chart shows you where is WFS position. You can see they are top two players together with Swissport in the cargo handling space. And look at stats. It is Gajimbote in there. Yeah, so in this case, this is the deal where a David is trying to swallow a Goliath. You and I can afford a good class bungalow, right? If you have 10 million in cash. But why would you and I not undertake a good class bungalow if you know that the remaining 80% of the cash, that means if you're buying 50 million, you have to loan 40 million. Now it's the same case for stats or similar, right? Because they're having to actually switch you on the rights issue. You can see that essentially, were they or have they actually put in place a affirmative funding position to begin with, right? And is this company subjecting shareholders to too much risk pertaining to this particular acquisition in the first place? Well, again, it's for you to answer, and the share price speaks volumes of the answer. So once again, ladies and gentlemen, we want to share with you, what we have shown you in this particular page. That is essentially at GCP Global, we actually teach knowledge, experience, and flair. Knowledge is basically using the experience that you have actually encountered, and I myself, have been a young, probably Singapore youngest head of research in the 90s before I moved on to work in Wall Street, and then I came back to Singapore to head the equity section of a couple of stockbroking houses. From my base experience is that most acquisitions would not be able to deliver. In fact, many research, just go online and search that more than 70% actually have failed in their acquisition goals, whether it's 3 years, 5 years, or even 10 years time. Now, I don't think we need to look very much further because in our classes at GCP Global, we actually try to distill our information, into good knowledge so that you have the flair to take big decisions, when market conditions are right. Now, this other chart shows you, ladies and gentlemen, that the collapse of Binance and FTX just 2 days ago, have caused major shareholders as Sequoia, Blackstone, as well as actually Tomasic. Yes, our Tomasic Link Fund. And guess what? Stats say Tomasic Link Fund, right? To basically write down the investments to zero. Okay. Now, and if you look at Sequoia mentioning and justifying the write down, they say is that the nature and extent of the risk cannot be identified. So they have write down $290 million in. Again, ladies and gentlemen, the horizon that stats is suggesting that we can realize the synergies, medium term, near term, near to medium term. Don't forget what Keynes say, one of the biggest investors in the world and most successful. He says that in the long term we are all dead. So you don't want the share price to basically be dead, before you even look at it, or before the benefits of any acquisition actually comes true. So you can see, ladies and gentlemen, if you do read our GCP Global website, which we actually post monthly articles year in, year out for the last 33 years, you can see that there are many examples of companies doing acquisitions that have failed, right? And so we're listing the facts for you. And oh, that's easy. Just look at the recent earnings results, which was just released 2 days ago. What did they say? You know, yeah, they have done the turnaround from lesser loss position of 30 million now to only 9.9. But hang on, you know, investors invest in a company because of future prospects, meaning capital gain, right? Now you have capital destruction. And two, dividends. What does that say? Despite turning around, Okay, they say that no dividend was declared. Let me just quote the Business Times, right? As the board says that it would be prudent to not pay a dividend until Stats restores profitability without government relief. Ladies and gentlemen, so it's not prudent to pay the dividend, but it's prudent to actually undertake a 1.8 billion acquisition. At this time, well, be the judge. After all, it's a Zhenghu company. I don't want to actually profit too much of my opinion on this, except to point out some inconsistencies. Right? The other thing that was pointed out in this again by the Business Times, not me, okay, is the rights issue will not exceed 800 million. You see? Again, they need to defend that they will not be raising too much money because if you look at the pro forma assumptions of their rights issues, like thrown out the window because the price now is so much lower than the figures used in the pro forma figures pertaining to 28th of September 2022 announcement. Hey bro, how come investors of stats are still sad despite the fact that stats is likely to be acquiring the largest cargo handling player? See, our next class is on 26th November, and this is something that we want to share with you, what we have always taught in our classes. That is basically how to become a prudent investor, to know when and to take a bait, when to actually be ripe in a position. Because, my dear ladies and gentlemen, the share price speaks volumes of any particular acquisition, be it transformative lah, accelerate lah, global footprint. Investors don't care about this. Okay, what investors care about is the ability of the company to be able to generate profitability. That's not coming from me, no, ladies and gentlemen. It's coming from someone that you and I adore all these years, all these decades. So we have been in the market for 33 years, but this gentleman has been doing it double my time. That's Warren Buffett, right? So he only invests in companies that are profitable, and rarely, ladies and gentlemen, does he actually buy companies that have taken over or are trying to transform themselves. He actually likes companies that go in and out, year in, year out, like Coca-Cola, Geico, as well as American Express, that thrives on organic growth, right? So this is what we look for in both our investments. And in our class on 26th November, we're going to highlight all these REITs or real estate investment trusts that are able to deliver on these attributes without undergoing huge, tremendous transformation, going to the market to raise money that endanger capital destruction for shareholders. So hope you can sign up, and enjoy it before the 15th of November while enjoying our early bird special. Do smash and like and subscribe to our channel. Once again, adios until next week.